Right, traders, welcome back to the channel. Here we have a new pair that I'm currently looking at. It is the Euro Yen. So the Euro Yen is something that was requested from a member based on the fact that they want to see yen pairs. So here I am going to give you a yen pair, and this video is going to be dedicated towards how to build a bias in the market, what you should do to build a bias in the market. So a lot of people say, oh, with ICT concepts, how can you determine a directional bias, a higher time frame bias? And this is exactly what we're going to be going over in this video. So we need to develop a higher time frame bias in this video, right? Higher time frame bias. So with that being said, let's get into the video. So when it comes to looking for a higher time frame bias, the first thing I'm going to be looking at is I'm going to be analyzing my structure. I want to know, well, I want to see, sorry, where the structural lows and the structural highs are in the market, right? So here's how we're going to begin that. The way that I'm looking at structure on the Euro Yen, this is the weekly time frame of Euro Yen. This is how I'm marking up. So we have an all-time high all the way up here, and we had price break the last low, giving us a low over here. Then we see a high, high, and a low, just like this. So if I were to use some black dots to annotate that, what we have is we have a structural high up here in black, and we have price giving us a structural low down here after breaking the last low over here, right? So we saw a shift in structure just over here from bullish to bearish. So we've seen a break over here, boss, and we've seen price retrace upwards, giving us another high over here, followed by another boss. So now we see another break of structure to the downside, and we've had that one more time over here. So we've had another break of structure here, just over here. So now we see three consecutive breaks of structure to the downside, right? Why am I highlighting this bearish structure on the weekly, right? Why am I highlighting it? Well, the reason I'm highlighting it is because we need to understand shifts in structure. Very, very important. Now, here we have the last structural high on the weekly. This is back in 1998, right? So we've gone way back in time. This high has been broken over here. So we see a structural break to the upside over here, right? Now we've seen price give a very healthy retracement. So this was our last high, and price has come all the way down over here. Now, let's zoom into this price action over here. What is it that we're interested in when it comes to looking at this structure? So the first thing we've identified is structure, right? That's the first thing. So the first thing is structure. What's the second thing we're going to be looking at? The second thing we're going to be looking at is the concept of PD arrays, or premium and discount. So what do I mean by that? PD arrays. So PD arrays essentially indicate to us how deep a retracement is with respect to the equilibrium, right? So how do we use the Fibonacci tool? A question I get a lot in some of our private members. They say, Liquid FX, how do you actually use the Fibonacci to your advantage? Well, here's how you do it. It's actually quite simple. We've identified two important points on the price on this price chart. We've identified the swing high, which is up here, excuse me, and we've identified a swing low, which is all the way down here. So we have our swing high and our swing low. So when it comes to using the Fibonacci tool, the way we do it is quite simple. We project from the swing low up to the swing high. So from here, it should be quite self-explanatory what we mean by discount. Look at this. We see price coming all the way down into pretty much a deep discount. So this over here represents a deep discount, or a discounted low, which is very, very important, right? Which is very, very important. So we see a deep discount over here. Now, what's the third thing we look at in price? The third thing we look at is the concept of a fair value gap. Now, a fair value gap is an inefficiency in price. So if I were to zoom into this discount range over here, we begin to see very clearly where the inefficiencies are. We saw an inefficiency all the way back here. So this is in November of 2000. So this here was our inefficiency in price over here. Now, look at how price came in, tapped into the zone, respected the fair value gap, and continued higher, giving us a new structural high to deal with, right? A new break of structure. The last high was broken over here after mitigating this zone. Now, the next question now becomes, now that we've identified our premium and discount arrays, we've identified our break of structure, and we've seen fair value gaps get respected down here, what is the bias? Now, you have to ask yourself something. Where is the pool of liquidity? Where is the pool of liquidity? What's the next drawn liquidity on this weekly time frame? Right, so I'm going to answer that question for you nice and swiftly. The draw of liquidity is here. This is the DOL, or the draw of liquidity on the weekly time frame. So why is this the draw of liquidity? What makes this the draw of liquidity? Well, it's quite simple. If I just bring your attention over here to the right of the screen, when we see price in an up, when we see price like doing something like this, right? We've seen a break of structure to the upside. So price is headed down over here. So we see price action head down like this. So price is headed down. Oh, sorry, let me just do that again. Price is headed down and giving us bearish structure before a break to the upside, right? So we've seen price retrace and now is targeting that previous high, So you need to ask yourself, why is this the next draw on liquidity? Now, the reason why this is a draw on liquidity is quite simple. It is a weak high. It has failed to make a new low, right? So notice how this high over here in the live markets has failed to make a new low because this is our previous low. Therefore, it's a weak high and it's a draw on liquidity. Very important to understand. This is our draw on liquidity simply because it is a weak high in the market. It hasn't done its job when it comes to producing that new low. So therefore, it's weak and we target it because it's a draw of liquidity. Because we understand above every high, especially a higher time frame high, what do we have? You guessed it. We have liquidity. Liquidity exists here. Liquidity is something that we look to target, especially on the higher time frame. So this is our clear draw on liquidity. So do you understand? It's very important to ask yourself, do you understand what I've been through? We've been through three fundamental concepts in the market, right? We've looked at our structure, our structural highs and lows. You don't even need ICT concepts to do this. This is more basics of SMC, but I guess SMC is derived from ICT, so it's just ICT concepts. We've seen structure give us a clear shift from bearish to bullish just over here. We've seen a discounted low being given. So we've seen price respect the PD array in terms of giving us a discounted low down here. And simultaneous to that, rule number 3, we see price giving us a fair value gap that's been respected and has headed higher. Now the next draw on liquidity is at 171. That's the next draw on liquidity on euro yen. So 171. So if we go now to the daily time frame, let's begin to dissect how we're looking at our structure on the daily time frame. So what we saw is we saw price giving us a weekly shift over here, and price has just been heading higher and higher and higher, right? So if I were to just dissect the structure quickly for people, the way that I'm looking at structure over here on the daily time frame is something like this. We see a high, give it a low, high, give a low, high, give a low, this high is given the low, and now from here you have to ask yourself, this high, has this high over here made a new low? Has this high made a new low? Well, look, the last low was down here, right? Because we saw price give us a shallow retracement before heading higher, giving us a shallow retracement before heading higher. So has this low been broken? Has this last low been broken? Well, let's see. No, it hasn't been broken. It's been swept. So we've seen a sweep of liquidity to the downside. We haven't seen a break of structure to the downside. This here represents what I call a liquidity sweep. Just over here is a liquidity sweep, right? We haven't seen a strong conviction below this last structural low over here, okay? So because of that, what does this high represent? This high represents a draw of liquidity as it's a weak high, right? So this high here is weak. Therefore, our next draw on liquidity on the daily time frame at least is all the way up here, right? So this is the next draw on liquidity at 164, okay? Very, very important to understand. A couple of notes, a couple of things to understand and take note of is the fact that which fair value gaps and therefore which order blocks are being respected. Bearish order blocks or bullish order blocks? Well, let's have a quick look over here, just on our most recent price action on the daily going back to November of last year and into this 2024 calendar year. So what we've seen over here is we've seen price give us a fair value gap over here, a bearish fair value gap. So this is what you can call a bearish POI or a supply zone, right? It really doesn't matter. So what we see here is we see a supply zone in price. So this is a supply zone. Has this supply zone been successful in giving a reaction? If it was successful, we would have seen price head lower and breaking that low with conviction. But have we seen that? No, we haven't. So what this represents is it represents a shift from supply to demand, right? A supply to demand flip. So this is not necessarily the convention of ICT, but this is combining concepts of supply and demand and SMC with some of the basic ICT concepts, which is something I recommend a lot of people do. Understand the basics of systems as they all work together and mesh very well, but it does depend on your personality and style in the market. So now that we've seen this supply zone over here give a reaction, so look at how price gives a reaction and fails to follow through, and it actually breaks. We've seen this supply zone get broken. Not only that, what does price create at the same time? What does price create as it breaks the supply? So we've seen a break of supply, just like this. And what does price leave behind? Well, it leaves behind a demand zone. This is the demand area over here. So price leaves the demand zone just over here in price. So the reaction is what we're looking for now. We're looking for price to give a reaction. Notice how price left a fair value gap over here. So there's an FVG over here, FVG candle over here, which I'm going to highlight in blue. This fair value gap candle is what price looked to fill, right? Look at how accurately price comes in and fills it, right? Just wicks below, filling this fair value gap or filling the majority of it before heading higher. So what this represents here is a daily shift from supply to demand, right? So a supply to demand flip will look something like this, right? We see supply drive price down, then as price gets back up to the supply zone, we see a failure of reaction, and then we see the supply zone fail. So what we see over here is we see price reacting to the demand, to the supply zone, sorry. So we see price reacting off a supply zone, and then we see price failing, right? And what we look to do is we look to enter off the demand zone, which created the flip, right? So we look to enter here. Okay, we look to enter here in orange, right? That's our entry point, and that's exactly what's happened over here. So this is an extra confluence, a very strong confluence actually when it comes to determining your bias. Who is in control from a supply and demand perspective? We understand we have liquidity up here because this high is weak. We understand we have a shift from supply to demand. So this demand zone is what's in control currently. And we see price giving us overall bullish structure, right? So our structure, our liquidity, and our supply and demand all line up with the fact that this market is very much bullish, and we have a weekly week high above us also. So with all these concepts in line, the euro yen is very much bullish, and I expect higher prices on this pair. The important thing to note and take away from this video is the fact that these concepts can be applied to any market, anytime, anywhere, right? So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.